You know, we'd love to have you put on your old analyst hat. So what would you say about COVID-related tech names right now? The performance they've had, the way that sort of ties to reality, and then the way in which it may or may not reverse as we see a consumer that gets weaker the longer this goes on.
Yeah. It's been very humbling, quite honestly, Carl, for a couple of reasons. One, I'm lucky to be part of a bank that senior management, led by Jeff Staley, our CEO, moved quickly to protect the employees, which was critical. But in conjunction with that, also focused all the resources of the bank to help our clients that need help. We've been parts of multi-billion-dollar deals in the automotive space, the airline space, energy, cinema. And it's been a humbling experience as our clients enter these difficult times to be able to step up and help them out. So that's been tremendous. There's one, small story I'll tell you where there's a company you know well that was chugging along, great top line growth, and it was profitable, et cetera. And about a week or two into COVID, I got an email from the CEO. And the CEO had complete change because of COVID and said, I need you to help me save my company. And the good news is that company got funding and is now well positioned through this. So being a part of this entire experience as a banker has just been a tremendous experience. Getting to your question about the COVID tech basket we talk about, right? Which technologies have been levered to this? Which ones are either more immune to the impacts and changing consumer behavior, or actually, levered to it and can benefit from it? And so we talk with our clients about this COVID tech basket, and COVID being an acronym standing for 5 different areas, right? So on the C, it's collaborative software and security. Names like Slack, Zoom, DocuSign, all names that have done very, very well. O is for online commerce. Obvious there, Amazon, eBay, Etsy, Wayfair, et cetera, all done very well as the people shop more online. V, video streaming and gaming. All those companies have done very well, whether it's Netflix, Electronic Arts, Activision, Nintendo. They've done extremely well. I, the in-home services, right? So think about education. Things like CHAPEK, think about working out, like Peloton, all Teladoc, getting teleservices, so all those types of things. The last one, D, is delivery, right? So delivery, whether that be Uber, Grub, HelloFresh, et cetera, have all done very well. If we look, therefore, on how we've done this year, as you know, the S&P is down about 9%, give or take. You know that the NASDAQ's up 1 or 2%. But if you look at from the peaks, right, you've got the S&P down about 13%, and you've got NASDAQ actually down about 7%. That basket of stocks we just went over was actually up 16%. And if we look at the run off the lows, that basket has outperformed the NASDAQ and S&P by an extra 800 bips. So you can clearly see investors are thinking about those types of names, particularly when we don't know how long the pandemic can go on.
Although, Bob, by the time we assign an acronym for a basket, I mean, it's usually an indication that it's already well absorbed into the market. I mean, what's to prevent it from retrenching from here?
Well, any name can obviously retrench, and we'll have to see what happens with the virus here and whether we get a second wave or not. But I think each one of these names that I mentioned, play to a changing trend that I think is accelerated because of the pandemic. So it was a trend that was occurring anyway, whether it be more video conferencing with Zoom or medicine at home with Teladoc. All that was happening anyway. I think this process going through the pandemic actually just accelerated a lot of that. So I think even if we did have some more bumps in the road in the economy, et cetera, these types of names should benefit to be either more insulated or leverage the events.
And Bob, good morning. It's John Fort. I think a key to figuring out where stocks like that perform from here is maybe understanding how we got to where we are right now in the overall market. So tell me what you think. It seems to me that the market either got something wrong or is getting something wrong. It either underestimated the Fed's resolve, overestimated the devastation from COVID-19, or is now overestimating our ability to recover. What do you think it is?
Yeah, I mean, I think you saw the violent moves, right? So from peak to trough, you're down 35% or so. So very violent moves in very, very short times. With the all-time high February 19th and the recent low, March 23rd. I think that's right. I think what the market tends to do, as you know, it's a discounting mechanism. everyone was aware that, now more aware of the carnage that the virus was taking place on the country. But I think now what investors are doing is looking for that delta, that next change of information. We start to see some green shoots. And ultimately, what can we look like in at the end of the year, 2020, looking at 2021? If you think about valuations, John, you had 2019, the PE was on average about 19 and a half. If you look at the PE today on 2020, it's about 21 and a half, about 2 turns higher. But I think what you're seeing is that investors are actually looking forward to 2021 in a more normalized environment. And ironically, off those numbers, you're actually looking at about 19 and a half times as well. So sort of very consistent with what we've seen.